What is up, everybody? This is EMIP TV. Let me just make sure I'm live. Okay, so yeah, EMIP TV, what is up? This is Dre. Normally I say, I don't know what I say, but we're going to talk stocks. I decided to talk stocks on this channel, and this is going to be my first video, and I'm kind of nervous. Because I don't really do this live. I can kind of do it, you know, and then edit it a little bit if I make a mistake, but I'm going live. And the first video we're going to talk about is how to double your money in Google or Amazon. The reason why I chose those two stocks, because look, these things are ripping. This is a hour. Let's go to a daily chart and let's look at this. So all my trucker people, all my photography people, you need to watch this, because this is how you make money. This is how you can make more money doing this than shooting pictures and doing photography. This is how you can make more money driving a truck. Okay, so let's talk about it. I want to talk, there's so much I want to talk about, right? But we'll talk real quick about the downturn. Some people got scared out, but this is the time to buy stocks. Let me put that monthly chart up. The weekly will look a little better. Maybe the daily. I want to make it look exaggerated, so this was the high way back in September, and we just dipped. People got scared out, but this is the time to buy stocks. This is when stocks is on sale. You have to scoop them up, especially if you're in it for the long term, right? You have to scoop these up. I mean, if you go to the store and you buy, gosh, let me think. I'm trying to talk food. Oh, we could talk PlayStation. PS4s, I don't know what they call. Let's say they're $3.99. They always $3.99. But if you go to the store, and everybody's buying them, right? But if you go to the store and all of a sudden it's $200, it's half price, would you not buy it? No, you could immediately buy it and sell it, because you know it's really worth $400. It's just a sale. So when you see Amzn right here at $22,050, and then it goes down to $13.07, why would you run? You need to buy that. You need to buy that. So the whole time this was dipping down, it's scary, because you're watching your account value just go down. But if you're in it for the long term, you know it's going back up. It's proven it time and time again, right? So I was buying as much as I can. I'm just, if I have any spare money, I'm putting it in the stock market. I'm putting it in the stock market, and it all paid off. All right, so let's talk about Google and Amazon. The reason why I talk about these two, because technology is ripping right now, and Google and Amazon are generally two stocks that be about to have earnings the week of April 28th, I believe, April 16th, something like that. I should have wrote it down. Okay, I should have wrote that down. Anyway, generally these two stocks run into their earnings. So it's like a characteristic. It's like a characteristic of a stock. So you can see the high here on Amazon. This is Amazon. This is still a daily chart. It was 2050. I have a feeling that this stock is going to run right into this high before earnings. I don't know how close it's going to get to it, but it's going to get. Let's look at the similarity of Google. This one is almost at its high. And generally they will kind of hover. They're going to hover high just before earnings, and they may tank 100 points, 200 points, especially Google. Google is known to be tanking after earnings, but sometimes every couple of years, this thing will rip after earnings, because it just does. It's like people didn't expect something and they whipped it out. This is going to be a longer video, so I got the coffee ready. All right, so let's go ahead and get to the point. I'm going to show you how. What I do is double. Now, let me give this disclaimer. Don't follow me. I know nothing. I'm not a stockbroker. I don't know anything. I'm just a truck driver that trades. But I'm just showing you what I do. And then, and that's what I do. Not for you to do, but it's what I do. Okay, that's the disclaimer. Anyway, so basically, I like to trade options. So we'll start with Google, and we'll bring up an hourly chart in Google. Look at this thing. It's going from the lower left to the upper right, just straight up. Could I draw a line like this? do I want to remove? Oh, let me draw a line. All right. Remember, this is live, and I'm not. I mean, you know, I'm not. There we go. Look at that. Oh, I got my extension straight up, right? So we're going to assume if we can draw a line from here to here, because we know it's going to run into earnings, right? So this is about 227, all right? 1,227. Actually, it made a high today and pulled back. It actually went to 1232. I got to take a time out. Let me look at the 1 minute. Yeah, look at that. So it's doing a little pullback now, which is great. So we're going to assume that this thing is going to run into earnings. So let's go ahead and pull this is the April 18th. These are the options that expire 18th of April. It's 28 days away. The next set of options, 26th April 2019, is the week that Google reports. Okay, so we're not going to mess with that week, because if we put a trade on in that week, 'cause especially if we're going to sell options, we can actually buy them as well, but we're going to sell them in this example. If we sold it on the week of reports, we won't really get any time decay on those options, because they're going to be holding its value, waiting for the event to come out. All right, so I'll talk more on that in a moment. So let's bring up the 18th April options. Oh yeah, you know what? This is live, and I meant to, let's see if anybody's in here, because I brought up my tablet. Let me try to bring this up real quick. Hey, and share this video out, okay? I need you to share this, because I don't know how to do it. All right. So Mike Johnson, yo, so how much are shares of each stock? You're looking at it, man. This is why I trade options on Google. It's $1,227 a share. That's crazy. Amazon is like $1,700 for one share. But we're not going to worry about that, because we're going to trade options. Anyway, so let's go down. Now, this is an advanced course, meaning, or an advanced demonstration. I don't want to call it a course, because I ain't teaching nothing. Of what I do. Okay, so I'm assuming you know all of this stuff, and then maybe future videos I can kind of talk about it, you know, a little bit by bit, kind of then maybe educate you. All right, so we know that Google's trading at 12.27. We're going to assume it stays like that. So I'm in the options that expire in 28 days. So let's go ahead and take the current price, 12.27 cents. It's right there. It's right there right now. And let's sell a vertical spread. Okay, so here it is, 12.27.5, and then we're going to buy the option $5 out of the money. So we're going to, right here, if you're looking at the screen, we're going to sell this 1227.5. And then we're going to buy the 122.5 for protection. So if it goes to zero, we don't lose all our money. You know, all we're going to lose is the distance of that spread. And that's $5, which is, by the way, options trade 100. So it's 5 times 100 shares, right? So that's actually $500. So if we do one of these spreads, the most we could lose is $500. But here's the catch, because we're going to sell it. And right now the price right here is going for $2.20. So therefore, oh, she's calling. Hold on. Babe, I'm live on YouTube. Check out EMIP. I'll talk to you later. That's live. That's live. Anyway, I lost my, all right, here we go. All right, so we're going to sell, we're going to sell a call spread. We're going to sell the 1227.5 and buy the 122. All right, $5 is the most we can lose. This is $500. That's where I was, right? Okay, so now, but that's not it, because we're going to get $2.20. That's what it's going for right now. So 500, because that's the real deal. That's what, you know, we're going to get $220 right now. We're going to get that right now as soon as I go submit. And that means the most we're going to lose is $280. Okay, so we're going to risk 220. We're going to risk 280 to make 220. So it's almost 50%. I said double your money, but we almost double in the money. So let's go ahead and analyze this trade. So this is the Thinkorswim platform, and one of the great things we could do here is analyze it. So here it is. Down here, I got all these simulated trades, and I'm gonna put the trade on that we have. Here it is right here. So if you see, basically, okay, so we're basically saying if Amazon is anywhere, Google, I'm sorry, we're talking Google. If Google is anywhere between right now, the price right now, and 28 days from now, if it's anywhere above this, as long as it don't go lower than today, as you can see, we're gonna make $215. You look to the left right here, the lower left, $215 by April 19th. And if it's under that, we're gonna lose $285, right? And you're probably like, well, I don't wanna, I'm only gonna make $215 to make 285. Basically, I'm gonna risk $285 to make $215. You're like, that's what's up with that? So, but if you look at the trade, and here it is, if you look at the delta, we have a 52% chance of making that money. So that's more than a little better than half. And that's why it's kind of skewed like that, So let me go back to that analyze. So let's check it out. All right. So basically, if you put that on, and there it is, it's that simple. I mean, so as time goes on, as long as Google keeps running to its earnings, we'll pull up the chart. As long as it keeps, I'll bring up the 4-hour chart. So yeah, here we go. So now I'll bring up the daily chart. Hey, I got all these drawings on here. Could I remove all drawings? Cancel. Remove drawing. Remove drawing. As long as it keeps on running up past this level of, what did we do? 227. We're gonna basically double our money. So what do we say? I'm gonna get the exact. What is that? 200. We're gonna make 215 divided by 285, and basically that's 75%. So it's not quite a double. It's not quite a double. We're gonna make 75% on our money in 28 days, as long as this thing stays, as long as it runs into earnings. Now you could always sell it if you chicken out. You can go ahead and sell this thing. Hey babes, how you doing? Very interested in this. Need to take a beginner's course. Yeah. And maybe I'll talk about that. Okay. Yeah, I kind of looked at the questions up in here. All right, so here we go. So what was I talking about? Yeah, so if you get scared, if you get chickened out, and it starts kind of tumbling down this way, you can always sell it. You won't be able to, I should say, buy it back, because we sold it. We actually, when I say trade this thing, we're going to get $225 into our account right now. Actually, that's kind of fluctuating. Let me go to my Analyze tab and see what kind of trade we got. Let's delete these trades. Look at all these trades. Anyway, what do I got? 302. We got it for 215. Let's make it 225. Change that. So basically, say I changed the figure. So 225, we'll make 225. We'll lose 275. So yeah, you could sell, you could buy it back, but it won't be worth $2, and you're gonna have to buy it back for more if it actually goes down. So if we sold it for 225 and it starts to go down and you get scared, you might have to buy it back for 350 or something like that. So basically you bought it for 350, sold it for 225, and you lost that difference. But as long as this goes up, and every day that every day that goes along, we will make money, because of time. Okay, this thing is losing value. All right, and that's one of the reasons why we can't do it on the week that it has earnings, because it won't lose its value, because it's going into earnings and it's a big event, and the stock is going to jump plus 100, down 100. You never know, right? So, hey, let me know how you like this video. Is this interesting? Do you want to talk about this? But I'm trying to gain new subscribers, and hopefully the old subscribers stick around. So let's go ahead and talk about that measly $225 again. I just did this one time. Of course, you can do this. Say you got 275. Let's do it 10 times. Okay, so that's 275 times 10. If you got 2,000 275 times 10. I don't really need to do this. $2,750. Put that on this trade, right? Let's analyze this trade and get rid of that one. And then you'll see the most you could make is $2,450. You almost double it in 28 days, right? And let's say you want to sell it 10 days from now. It won't be worth $2,450, but it'll be worth more money, you know, right? Let's say, because we could simulate that right here. So today's that's not the date. Wait a minute. Let's go to the date it's going to expire. All right. Let's say, you know, no, that's not the date I need to change. This is the date. There we go. Let's say it's, well, coffee's getting old. Let's say it's April 4th and it's right here. Where are we at? 2002. You already made $222 on the trade if it stays right there. Right here, as it is, same price it is today, and it's just, I don't know, next week, April 4th. You made $242. Like I said, we just don't need this thing to go down. If it goes down, we start losing. As long as it stays here or goes up, we win. We win all of this money. So that's the kind of trades that I do, especially going into earnings, especially with stocks that appreciate, stocks that I know that's going to run into earnings. And, you know, at earnings, they may sell off. Like I say, they may jump up a higher point, but we're going to be out before that whole event. We're playing the run up, and we're hoping that it goes higher from today. You know, so that was Google. And of course, the same trade, you could do the same trade in Amazon, because both of these stocks tend to run up into earnings. You know, look, they're doing the same thing now. If you look at some of the FANG stocks, they call it Facebook, Alphabet, Amazon, Google, Netflix, NFLX, you can see how they all running. And let's talk about why they running. Just yesterday, the Fed decided to keep interest rate alone. Not only did he say that, he said interest rates are not going to move this year. They're not going to move. He's going to be patient, and he's just going to watch and go. Because the economy kind of sucks. The world sucks. But let me see, none of that stuff matters. In my whole time trading, nothing matters but being on the side of the Fed. If he's dovish and he's lowering, or I should say not raising interest rates and maybe lowering them, the market's going up. I don't care what's going on. Just filter out whatever you hear in the news. Brexit, bird flu, whatever. All of those events, filter it out. If the Fed is dovish, the market is going up. If he's hawkish, meaning he's going to raise interest rates and I'm raising next quarter, I'm raising rate, the market's going to go down. It's really that simple. Filter out everything. Keep your eye on the Fed, where he says, and you can't fight the Fed. And if you heard that term before, if you like to trade. So, hey, babes, you still there? My babes is lifelike eye in the comments. And comment, guys. So anyway, did I explain it? Because I'm about to end this video, and you can go back and play it back. And basically, we're taking an options trade, and we're basically saying in that options trade that we can use Netflix for this example. I can't use Netflix. It's not in the title. Let's use Amazon. We're basically saying from this point on, we going into earnings, which is, could I change the time axis? Give me a minute. Let's make it 100. See, we push it back. See, earnings is over here somewhere. I should have drawn a line, but let's say it's right there. Well, not like that, but right at the beginning of the line, it's right there. As long as this stock goes higher before this date, which it's already doing, it's been doing it since December 24th, we'll double our money. Okay. It's risky. Don't think we could lose. This thing might just start hit right. It might here and just tank. That's why you want to get out. You know, you might want to just say, hell with it, and get what you can by buying back the spread. Yeah, so that's what's up. Yeah, babes is still there. All right, so Let me know how you like this video. Let me know if you have any questions. Put your comments in the comment and I'll answer them. A little different from trucking, a little different from photography, right? And if you want to see more videos like this, I should put it in the description. Hey, babe, type this in if you ain't driving. The Trading Scared, bit.ly/trading scared. That'll take you to the YouTube channel where I do this. But I'm going to bring that over here. And that's another video in itself. All right, so yeah, thanks for watching. The market looks like it's going higher. The market seems to be interested in growth stocks at this time. Why? I don't know. The reason, because their growth, like the economy is fluttering. But what's not fluttering? The growth stocks. So they're kind of going to jump into that. And, you know, Google ain't messing with China. We don't need a trade deal for Google to flourish. You know, same with Amazon and all that stuff. So that's why they're buying at these kind of stocks, and they generally rip. Now, if this is, our trade will be over when earnings comes, okay? But when earnings come and these things just sneeze and don't have a good quarter, they tank it, okay? That's the thing about growth stocks. That's why I don't want to mess with the earnings. But there's different kind of trades you can put on in earnings and kind of make some money. All right, so thank you. There it is. If you look at the in the comments, you'll see my link to the YouTube channel. And the reason why I have to put a special link, because if you would search for it, it's kind of new. It won't even come up. There's the link. Check it out. I'll also put it in the description after this video. So anyway, thanks for watching. If you can paper trade, if you got Thinkorswim, put it in the put this kind of trade in the paper money section and see. We can market today. I'll come back the day these earnings and we'll see what these stock prices are. We'll see if this trade is a winner. You know, if these things are going to continue running up in the trade, like Amazon, it's looking pretty extended right now. You know, generally I'm like, oh man, this thing is going to pull back. This thing is going to pull back. But if you look right here, I'm going to draw another line. Yeah, it goes all the way across. Can I remove this line? Remove drawing, remove this drawing. You can see it just blew through that resistance. You know, generally a pullback, I don't know, it just blew through it. That's another sign it just kind of just wants to go higher. It generally, see, like, look over here, boom, hits it, comes down, boom, hits it, comes down. These times it didn't even reach it. This time it blew it. It blew through it. So what's the next point? Well, you got one on it kind of over here. Freehand draw. I don't think I can. That's what it needs to do. Anyway, so there it is. There's the video. Thanks everybody for watching. Mike Johnson. Yeah, learn this stuff, because let me tell you something. You can make more money doing this than everything. Where are all the rich people, the billionaires and excuse me, millionaires? You know, most of their fortune is made in the stock market. You know, that's why they learn this stuff. You know, the reason why poor is poor and people that remain in poverty is because they don't do this stuff, right? And the option trade, that trade only cost me $300. What was it? $275 to do. Even though these stocks for one share cost $1,805. That's Amazon. One share, and Google is again $1,229 for one share. But the trade that we did only cost you $275. That's it. And that's your chance to make the other half, 225. All right, so I'm just looking at the bit. No tradingscared.com on that bit.ly. It's bit.ly/trading scared. No .com. Anyway, so yeah, that's the other channel. But I'm gonna do more of those videos here. Okay, so thanks for watching. Let me know. I really need to know. If you watch this, if you watched this far, please leave a comment. You're gonna help me out. This is how you like it. What do you think? Critique everything. Critique the trade, critique the channel, critique my hair, critique everything that I'm going over, because this is brand new. And I'm doing this live, so I'm kind of nervous. If I could edit it and do it and kind of, oh man, this will be all pro. This will be all pro. But I have fun doing this, and so generally I kind of did like a teaching thing, but this is what I do. So it was really exciting. It was really fun making this, man. It was fun. So thank you all 5. Can I get a shout? Can I get a like? Can I get some likes? I'm gonna let you know y'all all listening. And remember, one day the stock market's gonna go down, probably big. Nobody knows. That's another. Nobody knows. All right. Nobody. These are just all videos within videos. Nobody knows when it's gonna go down. Nobody. You know, we had that 2008 event. Guess what? In the last 20 years, just tell me, when was the best time to buy stocks? 2008. Oh, y'all was scared. You got out, but that was the best time. 2008. Warren Buffett, buy when greed. Sell when be fearful when greed, buy when fearful, whatever, something like that. The best time to buy stocks in the last 11 years was 2008, when the world was, everything was going crazy, right? That was the best time. Should have been buying, not selling. Buying. You would have made a whole bunch of money. Oh my gosh. Let's measure it, because I can measure it. From here, there's the 2008 low. Bring it up here, and there's the high. Oh, shoot, I took it off. Low. There's the high. There it is. 1,066% on your money. Okay? So if you put $1,000 in 2008, you would have $10,000 right now for $1,000. If you'd have put $100,000 in, if you had it, been a millionaire. That's right, a millionaire. When everybody was running. So just keep that in mind. You have to buy. Hey, what's up, Big Face? A little different. I'm doing a little different video right now. But yeah, check it out. If you just got in, check out the replay. Let me know how you like it. We're talking stocks. And I'm talking that 2008 crash. It was on sale. So, if that happens again, buy. Don't run. I know your 401ks and everything is just tanking in the value. But what you need to do is try to get as much money as you can, work overtime, and put that money into the stock market. Okay. Truckers, do extra loads and put it into the stock market. Photographers, take more pictures and put it into the stock market. The stuff is on sale. It's hard to do. But it worked out in every single event in the past. 1929 was the other one. I don't know. 1987 was a crash. The stock 2000 was the worst for me. The tech bubble. Okay, because the market went down for 2 years. But you know what? That was a great time to buy. Accumulate. Could accumulate. Anyways, all right. Thanks for watching. I'm extending this video. People's gonna look at this time and say, I ain't watching that crap. All right, so we'll see. I'll see you next time. Could be tomorrow, could be today. Thanks for watching. This is EMIP TV. Check me out, Trading Scared as well. Peace. Now, how do I shut this thing off?